All right, let's also turn our attention to fixed income. We take a look at bond yields just 2.5 weeks ago. The US 10 was at 2%, now at 1.74%. We're talking about perhaps that inversion of the curve. Let's bring in Tim Kelly from Australian Ethical. Tim, very good to talk to you this morning. Just before we get to that, I wanted to ask you about that latest development on AGL. Obviously, with that latest offer from Mike Cannon-Brookes and Brookfield being rejected by the board. What did you make of that?
Personally, I found the rejection of the second offer a little frustrating, particularly because it has been reported in the media that Brookfield would be walking away from that particular transaction if it was rejected that second time. There's a critical timing element to that particular takeover offer, and that is the demerger proposal that's happening for AGL. And getting in ahead of that and ensuring that the two companies that AGL proposed to demerge into are kept together, so that you can manage both the transition to more renewables and the shutdown of coal at the same time. Whereas the demerger proposal would shift the coal assets and some wind generation out to a separate company and keep the customer base for AGL separate from that, and take existing renewable investments with it. There's a significant investment that is required to transition this country to a much more sustainable footing for its energy generation. And the Cannon-Brookes Brookfield proposal was proposing to accelerate that. AGL's demerger, on the other hand, will see us relying on the Loy Yang power station through until 2040. And that's just another 2 decades of having coal at the heart of Australian power, and that's just not good enough.
All right, well, let's leave that one there, shall we? And get into that yield conversation, because it's been pretty incredible to see the flight to safety and the impact that it has had on US yields, in particular because with inflationary pressures being as they are, I mean, we have been preparing for higher bond yields for quite some time. So what happens now?
The market certainly had a couple of good spurts of preparing for the higher rate environment that lies ahead of us. But whilst central banks are keen to normalise cash rates and get cash rates back to being the primary tool of monetary policy rather than bond buying programs, for example, there is a certain degree of caution that is required and has started to be messaged from central banks in the last week. We had Fed Chair Powell last week saying that he would propose and support a 25 basis point hike at their March meeting next week. Now that, of course, hoses down somewhat the expectations that have started to become priced in of 50 basis point hikes in the near term. But he did leave those on the table for later in the year, should inflation be persistent. On the other hand, we had the RBA last week. They also stepped in and said that they would continue to be patient with the outlook for rates. They feel it is possible for them to raise rates in 2022, but we still look at the futures implied pricing for Aussie rates for us to get to 1.2% by the end of the year, which has moderated some 10 basis points, but it still has 5 rate hikes in there. And that seems quite aggressive pricing compared to the messaging that's coming from the RBA.
Tim, let's take a look on the corporate front and the non-bank lender Plenty unveiling its latest asset-backed security. It's a green one. It's with renewable energy, essentially.
Sure. So what we've got here is our income fund was participating in the securitization that came from Plenty last week. This has been the third issuer to come to the Aussie dollar market with a securitization that includes consumer receivables, where they're financing homeowners installing solar panels and battery systems. So before Plenty, we'd seen issues come through from Hum, the former Flexi Group, and from Bright. For Plenty and Hum, the consumer receivables for solar represent about a quarter of each of their books. And for Bright, it was more of a pure play of solar and battery systems. And so we see supporting this sector as a way to enable people to put their money where their mouth is and provide funding to people who are enabling this kind of investment. With Plenty, we'd be happy to see them coming back in future, particularly with them in November launching a warehouse and a product that was specifically designed for EVs. There weren't any of those in this particular pool, but we'd hope to see them return to market.